Good morning, everybody, and glad to see you coming back again and watch my video, Grant, and the guy from One Rental at a Time, and Tom. Uh, this video of mine is often show prep or response material for other channels, and I appreciate that. I'm one of the greatest real estate minds in the country, broker, appraiser, investor for over 3 decades, one of the leading real estate educators in the country. And I have to go through these videos of these proclaimed experts in real estate that are now either begging you to invest in their real estate that they are not providing returns for the investors now, or stating that you should go out and sell your house. And that's ridiculous. I'm been up until 2 a.m. every night this week working, and that's in many aspects of real estate. That's in appraisal, that's in brokerage, that's investment. And not out of a crisis situation, but out of an opportunity situation. And as I look at Grant's video, and I got to ask, there's a lot of haters out there. I'm not a hater. Grant will probably hit my hate button, but there's a lot of things you need to ask here. Grant is a great salesman, but is he out of fish? If you know his videos, then you can go back and understand what that means. He's suspending all payments to investors for the next possibly April, May, and June. If you go back to my videos, is Grant out of his real estate mind, or is Grant worried about his apartments? You'll see I asked some questions and he responded to these. Well, I still have a lot of questions, and you should too. If you're so good and you're such an expert, why were you so unprepared for economic hiccup? Immediately he suspends payment. This crisis with the virus only started recently, and yet immediately he suspended payments. A true good real estate investor is prepared long before the crisis comes about. In the video today, he says, contact him about getting properties at bargain basement prices. I don't think that's going to be happening. Maybe for some people that are underfunded, that need to suspend payments on properties or didn't put enough down, but generally, I think we're going to rebound. And I would like to ask him, does he have any deals in the works? Are you renegotiating those deals? Because as I explained in my prior videos, if your rent goes down, the value goes down. Well, you say you collected 90-something% rents last month, which even during a good time, 90-something%, 94%, I think he said, is good on an apartment complex. So is he renegotiating? You got to ask yourself, why are you investing in something if the investor is not sending you a payment back? And I still see people, some guy stated he put 50% of his net worth, $150,000, into one of these investment funds. That's just crazy. That's stupidity. 50% of your net worth in one thing? Seriously, come on. Second, $150,000 that you're now not getting any return on? What are you thinking? I don't get it. So, he goes on to say, don't sell your house. Sell your house. Don't refinance right now. We're busy with refinancing, and it's still active. Yes, the last few weeks, requirements has gotten more stringent, but if it makes sense to you, decreases your payment, why wouldn't you refinance? Why would you invest in a fund like this where you cannot get your money out for years and years and years, when you could invest in a REIT, a real estate investment trust, which you can get your money out anytime you want? You have more control over it. That's a question I'd like to know. his lots of his properties, I guess, are interest-only loans. So you think about this. You start off with owing, just for instance, this doesn't relate to his properties. You owe $5 million. You owe $5 million. You start making payments. It's interest only. 3 years from now, you still owe $5 million. So basically, you're buying all this stuff on speculation. You got to have an increase in value because you're not paying down anything. And the old way, you have principal and interest. You have a principal reduction and you pay some interest. And yes, at the beginning, you're hardly paying any principal, but you are paying a little. And over time, for a long-term investment, you do have maintenance, upkeeps, and renovation costs. If you keep an apartment for 10 years, it's going to have a 10-year-older kitchen. How good is that going to be in the marketplace? Well, if you had payments that had some principal reduction, usually that would offset the renovation cost, not the maintenance cost, the renovation, because your kitchen's going to get dated, your bath is going to get dated, your public areas are going to get dated, your pool, your tennis courts, your entryway. All this is going to not only need maintenance, but need renovation or replacement. And this is the case, like sometimes you go through and you see them tear down a McDonald's after 20 years. Well, it was still functional. The building was still functional, but it's dated. It's just dated. So they tear the whole building down and build from scratch. And same footprint, same size, basically. They might change the drive-through, but they're updating it. So there's not only maintenance, there's updating. So when you have principal reduction, that sort of is a counterweight to renovation cost. With interest only, you have to renovate these properties in the future, not just maintain them, renovate them. So now you have a principal that's the same when you started, but you have renovation costs and maintenance costs in that. So in 10 years or 20 years, whenever you sell, you have to take this in consideration. Grant Cardone is a great salesman. He is a great salesman. Think about this. He's selling you as sending in his money. He's selling you as investing in courses. He's selling you on buying his book. But at the same time, he's not giving his investors their monthly payments. Why is that? What's your opportunities other than this? You have to look at the big picture. And Grant Cardone Capital or Cardone Capital is probably a great investment for some people. It is, really, truly is, I say that. Because some people just want to send their money away and want somebody else to take care of it and just send them a check. Well, an investment is an investment. I don't care if you're buying stocks, real estate, gold, Bitcoin. It's an investment. There's always a chance you're not going to get your money back. There's no guarantee. If you want to no investment, just put it in the bank and you get hardly nothing for it, but you'll get your money back, and the cost of the value of the money will likely depreciate, especially where they're printing money here now. So you always have that risk. You're going to possibly lose your money with any investment. Other people are more hands-on. And he says single-family homes are 2 to 4 units are horrible. Now, that's not the case at all. That is not the case at all. In fact, I would say if you're hands-on with them, they're safer than apartments. Just think, if an apartment complex goes to 20% vacancy, what's the market appeal of that? Nobody wants to go into an apartment complex that has a high vacancy rate. Things happen with that. If you go to a house, they're coming and they're seeing a single occupant. It's vacant, and they're going to occupy it. I mean, it's different as 10 houses on the same street are vacant, but that's not likely the case. You're not going to find a lot of single-family detached houses vacant. 2 to 4 units. You might have one vacancy, but that's if you have 3 occupied. It's typical. Maybe you have one vacancy now and then. But if somebody's coming into an apartment complex that's higher vacancy rate, then there's other things that go through their head. So they're asking, why would anybody want to live here if the vacancy rate's so high? Then the apartment complex has to start giving discounts and incentives to re-sign and everything like that. And when you get those big banners on front of an apartment complex, free rent or discount and all that, that I can make the argument that that's a bigger curse than it is a market benefit. So, you got to ask yourself so many things here. He proclaims he's such a great real estate. He's definitely should probably transition into physical fitness rather than real estate, because he's definitely gotten physically fit. But is his real estate fitness that good? Ask yourself.